Oh, how is everybody's Wednesday night? First Wednesday of the year. I'm loving this. Still busy just as I was yesterday. Today we are on episode 15 of our DIY bookkeeping series. Today we're going to be discussing aging reports. We're still on reporting. So, aging reports, specifically AP, which is accounts payable aging reports. And I will explain to you in detail what that is. Uh, let's get into why we do this, shall we? First of all, I need to remind you to please enable StreamYard. Click on the three little dots on the bottom right-hand corner of the video and enable StreamYard. That enables me to see who is commenting. And I welcome all comments. Like that. Okay, so the reason why we do this is we've got primary and secondary reasons now. So the first reason is for small business owners. Due to COVID or whatever other issues that small business owners are facing right now, they may not be able to afford a bookkeeper. And so I want to ensure that you know how to do basic bookkeeping. And this is only for reporting. This is not so you can go out and get yourself $1 million loan, get out there and get a Lamborghini and a condo and all of that stuff on the beach. It is not for that. This is just for management so that you know the financial health of your business. Because there is nothing more important, other than making money, of course, there is nothing more important than knowing what the financial health of your business is, because that determines whether you are succeeding, whether you are making a profit or a loss. So, we want to make sure that you understand how to read those reports. We also want to make sure that you know how to get everything in those reports. So, these are just basic instructions. We're not doing anything advanced. And I do recommend that you do have at least a CPA. If and I know a CPA is generally more expensive than a bookkeeper or a tax person, a tax professional. So just have someone that you can run everything by that can do the advanced stuff for you. So that's my 2 cents for that. The secondary reason is I am now working with a lot of new bookkeepers. And so I want to ensure that they also know what they're doing because so many things have happened this last year with COVID that it's introduced, and education is no longer prominent. It's not there any longer. Excuse me. It's not there like it was. And the bookkeepers are not learning like they should, unfortunately. And so I want to ensure that they also are benefiting from these videos because it's got basic information for them there as well. So, as always, we do a review of the previous video. And we're going to just do this very quickly. Last night, we were discussing the trial balance and the audit log. So let me share my screen. And again, we're back in the sample company. So if you remember correctly, we go into reports. And I do apologize. It's because I'm on this live video. Things are taking a little bit longer. We're not going to find these two reports here in your favorites. These are this one right here, again, your profit and loss, also known as a P&L and an income statement. This one is your most important report because that is how you will know if you've made money or not. This is the second most important one. But all the way down here, and it also depends on what subscription you have in QuickBooks. Down here, we've got the trial balance. And if we go to last year, run the report. This is everything for last year in the sample company. Now, remember what I was saying is here you've got the ending balances. So the entire year's balance, it's all accumulating. You've got the balances for every single account that you have in QuickBooks. So these two should always match. If they do not match, there is something wrong with your books. Um, that's the biggest thing right there. If you do work with a CPA, I hope that when they're filing your taxes, my sincerest hope is that they are entering the journal entry that you need in order to match to your taxes. If they're not doing that and expecting you to do it, then there is a problem. Um, CPA should not expect business owners to enter a journal entry that is that lengthy and that advanced. Business owners should not be doing journal entries, period, anyway. So if your CPA is making you do that, you need to find a new CPA, unfortunately. So um, they should be entering this one, or they should have a bookkeeper that is on their own staff that's entering this for you. Typically, when they are sending this to uh, a bookkeeper that is on staff with the small business owner or as a third party, they will typically send us a spreadsheet with everything that needs to be done. And that would include your depreciation of all of your assets. It would include interest. It include everything. Excuse me. Got a little frog in my throat. And so what we would have to do is we would have to enter all of those journal entries, ask for a trial balance from the CPA, and make sure that we match with everything that they have. And that's how we know that we are on the up and up with the CPA and that everybody is on the same page. So this is another really important report. If you're unable to get it, that's not a problem. I would hope that if you have a CPA, your CPA should have this and has access to it and does everything that they need to do with it. Back to the report list, we're going to the audit log, and again, not here. Now, these two reports are not going to be in your most basic QuickBooks Online subscriptions. The most basic ones are going to be your self-employed, or I forget what the other one is called. Those are only going to have these three reports and nothing more. So this is a benefit of me having my accountant version. It's the benefit of being a bookkeeper. So I'm able to do this. If you do have an advanced or plus subscription, if you've got an advanced subscription, you shouldn't be doing the books yourself because I'm sure you've got a very large staff. If you have the plus version, then you will be able to get to this. You'll have all of these reports at your disposal. So your audit log, again, you know what, we are going to give this, we're going to say last year. It's going to be a lot of information. So this is your audit log. Now imagine that you've actually got an employee or even an outside service that you're using as a bookkeeper. This is going to tell you, again, it's going to tell you who did what and when. It's going to tell you exactly what they did, give you the date and time, and it's going to give you their name. It's also going to tell you the customer or the vendor that they were working with and the amount. You can view it. It's going to tell you here what accounts it hit. So if you ever have an issue where something has gone wrong somewhere, Uh, let's say you've already reconciled the month, and that's something it's something we're going to get into later in a few weeks. But you've already reconciled something for last year, but now suddenly everything is completely off, and you need to find out what happened. Where did the change happen? What change happened? And unfortunately for myself, I've had to deal with this. I had to clear my own name because I was being wrongly accused. And I actually had to go into the audit log and discovered that the business owner had made numerous changes to everything that had been done for months. And so I had to go in and I had to redo every single thing I did and show him the proof. Didn't work, but at least I had the proof and I was able to fight for myself. So we never want to be put in that position, because if we're put in that position, then chances are you're not going to be working together any longer. So um, again, that was just a review. Let's stop the share. Now, into the meat and potatoes, we are going over the aging reports. This is the first of two aging reports. Tomorrow we'll finish the reporting section of all of this. That will include collections for the agings. So collections also being accounts receivable. So let me share my screen again. This time, we're going to go back into reports. And you can do this a couple of different ways. There is, I was getting ready to click on accounts receivable. We want payables. You can do an aging by summary or by detail. You really don't need detail, because that is going to list every single item, every single service, every single minute detail that you put in an invoice. And you don't need that much detail, because you're not collecting on each individual item that's on one invoice. You're collecting for the entire invoice. So let's see here. uh, those are sales by customer. Okay, why isn't it showing up? We've got your payment methods, your transactions by customer and tag. That's because I am in the wrong thing. Here we go. Okay, unpaid bills. These are for all dates, which is what you always want to have, unless you are specifically looking for a cutoff point. So if you have an employee that is printing off one of these reports for you, then you'll probably tell your employee, you know what, I want to see an aging report for everything that is everything that's due as of December 31st. And what that person can do is actually tell it to do a custom date. And it's going to be as of December 31st rather than doing all dates. And it's still going to pull everything up right here. So, which doesn't make a whole lot of sense. In QuickBooks Desktop, it's a little bit different. So what this is it's telling you everything that is due for this particular date. So we've got one thing here that is 41 days past due. A lot of times, unfortunately, you're going to see, or a lot of companies anyway, are going to see an aging report, possibly with something that shows 90 days past due, 180 days past due. Hopefully not. Hopefully they're all current on their bills, but it's bound to happen. I've worked for companies where sometimes things wouldn't get paid for years. So, um, this is what this is the most important. This right here, the due date, more specifically, the past due date. Because vendors typically, there are a few ways that a vendor likes to get paid. There is something called due upon receipt, which means pay it as soon as the transaction happens. Many of them will not wait until you receive the bill from them. They just automatically expect you to know that it's due. There is due in 10 days, 2 days from the date of the invoice. And yes, there is a lag time with mail. And so many times you will end up with mail that's going to take 5 days for you to get, which means you only have 5 days to pay it. And that's not business days. So that is 5 days total. So you've got 10 days total to pay it, not 10 business days. And that's just the way it goes. I have rarely ever seen due in 20 days. I don't even know that one exists really. 30 days is the most common, net 30. It's due 30 days from the date of the invoice, not from the date that it is received, from the date of the invoice. There are a few others, and I know that I've mentioned them before. We'll go over it again. That is when a vendor is offering a discount. What does that mean? When a vendor offers a discount, it means that if you pay a bill within a certain amount of time, they'll offer you a percentage off of the total bill. So mostly what you'll end up seeing is something, you'll see a little code and it says 2% 10 net 30. What does that mean? It means if you pay within 10 days of the date of the invoice, within 10 days, they will allow you to take 2% off of the entire total of the bill. I have seen 1.5%. I've seen 1%. I think I've even seen 5%. 2% is the most common. So it's an incentive for you to pay early to ensure that everything is paid on time, but you want to pay early so that you can get that little bit of a discount, because every little bit helps. Every penny helps. When you're trying to save up money and you're trying to make that profit, every penny helps. So that's what you're going to see most often when it comes to discounts. And there is actually something in QuickBooks that you can set up that shows, yes, there is a discount if I pay this at this time. And so what it will do is you can actually program it to show what the discount is and in how many days, so that if you pay it, let's say in 8 days, then it'll automatically come up and say, okay, do you want to take this discount? So it's a nice little feature that vendors give small business owners, actually any businesses really. So we as bookkeepers, what we do is we print up that report, and most of the time the business owners will ask us, you know what, rather than giving it to me to review everything, why don't you highlight what you feel is due or what you know to be due right now, especially if it's a company that doesn't deal a whole lot in accounts payable. Then 9 times out of 10, you're just going to pay everything that's on the list. That's the nice thing. Other times it's, okay, highlight everything that is due no later than this date. So if you have a company that is not doing well, unfortunately, they will end up doing that, and they will end up cutting out a very large chunk of what needs to be paid and just biding their time. So um, that's what we do with the AP aging report, the accounts payable aging report, is we're highlighting everything and then we hand it to the business owner and say, okay, this is what I feel needs to be paid. I've reviewed everything. You've given me this amount to pay off of. This is how much I have to work with. I've done all of my calculations. This is how much money is left over. We might be able to squeeze $50 in with this one, or whatnot. And other words, it's, you've got to concentrate on this one bill because it hasn't been paid in 120 days and they're threatening to send you to collections. So you really need to pay this now. You're going to have to let everybody else wait and you're going to have to pay that one bill. So it's one of the little pieces of the puzzle of my job that I've always hated. I love doing accounts payable. Absolutely love it. I hate that part. I hate having to be the person that has to pick and choose what gets paid and then getting those phone calls from vendors saying, where's my money? Where's my payment? Why didn't you pay? And being threatened and everything. But you know what? I wouldn't want to be in their shoes either. So I wouldn't want to be the one making those calls. I've been the one making those calls before as well. So, and we'll get into all of that tomorrow. So the reporting sections of these videos are not that long. They're not that detailed. We're able to get out on time and for the most part. And they're just brief reports and it's explaining to you what they are and what they mean. So tomorrow we are again finalizing the reporting section of the DIY bookkeeping series, and we're going to be going over what we call AR aging, a collections report, accounts receivable report. We'll be getting into that. Again, as I said last night, Tuesday, next Tuesday is when I really hope y'all attend the training because we're going over something that is extremely important, extremely detailed, something you're going to want to take notes on. And that series, that episode may last an hour. So it's one that if you are a business owner of a construction company, you definitely want to tune in. If you're a bookkeeper for the construction industry, you definitely want to tune into this. So, but for now, we're on reporting. So we're going to wrap this up for the night, and I will see all of you tomorrow at 7 p.m. Central Standard Time, again, where we will discuss reporting, collections, also known as the AR aging report. I pray you all have a wonderful evening. Thank you.